On the last Forex video, we were looking at the 5 and the 6 minute. On this video, I want to go up to the 120 minute. Okay, so we can see how the chart looks, the Forex charts look with the indicator on the bigger time frames for the bigger moves. Okay, and know that on the 5 and 6, those are very small time frames. So we're always going to look at bigger charts, meaning if the 120 minute is red and it's in a short signal, okay, which is the second set of reds right here. Our stop would be right here. So it's very tight. Okay, so if the 120 minute is in a short signal, we are only going to trade the two smaller time frames short. We are not going to try to go long on these minor moves up when the 120 minute is still red. That's too risky on the small time frame. So we're really only wanting to trade smaller time frames, bigger time frame direction. And you'll notice on the bigger time frames, it's very clean. It's very, when I first made all of these indicators, it was to tell me what not to do first. Okay, that sounds different from how everyone else looks at it, how they will only show how much money you can make using this method or using their method. But really, when I first made this, was telling me what not to do first. So instantly, when I turn my chart on and I'm looking at this and the bars are red and they're going down, I instantly know do not go long the smaller time frames. That is very key, because if you can avoid 50% of your losing trades, it's going to make a huge difference in the long run of your profitability. So we want to know what not to do first. Okay, if you can learn what not to do, learning what to do comes much, much easier. Okay, you won't be fighting yourself saying but this, but that. It has to be simple and it has to be on the chart. Don't make a 100-page trading plan because you won't follow it anyways. Okay, the plan has to be on the chart visually. Okay, so you can see there was a nice move down. Finally, we close above the moving average here, so we'd be taken out on that method of stop. Okay, let's follow the chart. There was a couple other sell signals here. I'm not going to label every single one of them, but we'll keep going so you can see the chart. Okay, we have blue bars here, big move starting, and we had a big move starting. Okay, bigger time frame is still up, so we think this is an up move. Okay, if you miss the first set of greens, you're going to buy the second set right here. Stop is right here. Okay, and you're going to write it to the target. Targets are what we go over in the course. Okay, here's a step, here's a move. We go over all that in the course. Here is a continuation trade in this pattern up. Okay, I'll make the chart a little bit smaller so you can see. So we have first signal here, second entry here. Okay, even though the bars are blue, they're green. You can see on the line. Blue bars, indicator low, big move starting, and it's green. It's above the moving average. Moving average is green. Everything is saying up. Bigger chart still says up as well. Okay, so we know the direction. Okay, so off of blue bars, you can either enter off of the second set of greens, which would be right here. The indicator's green, and your stop goes right here. Okay, once you're in, if it's blue bars, it's even better because it's saying a bigger than normal move is going to occur. Okay, out of this range, okay, this contraction, this is going to predict the break. Okay, instead of trying to predict it by just some other random method, we're going to wait for it to actually break to get in. Okay, we'll keep going on the chart. Also blue bars here, indicator low. Bigger directions up. Now, even though we were coming down, you could have traded this on a smaller time frame short because the 120 is red and it's coming down, but you have to know that it's counter trend. Even though the 120 is red, it's still counter trend because the bigger time frame is still up. Okay, so blue bars, indicators green, it's low, big move starting. We have a big impulse up. We have a correction. We're not predicting here, we're just waiting for the second set of greens. There's our buy signal. Ride it up to the top. Blue bars, exit your signal here. Okay, The point of this video is I just want to show the bigger moves, okay, on the bigger chart. And if the bigger chart is green, we are only going to trade the smaller charts in a long position. The smaller charts will still give you a short signal. It's you knowing to skip those. Okay, let's go here. Blue bars caught the bottom of this move down. So as soon as a blue bar comes in, trail the stop, we get taken out here. So even if you miss this move down, and you just turn your computer on and we're at this blue bar low, okay, and the indicator's high, you instantly know, do not take the smaller time frames, or any time frame for that matter, short. Why? Because we're down at the extreme low of the move. If the blue bars give us high odds that this move is over, why would we enter short on a smaller time frame? We wouldn't. Okay, so then there's a correction pattern A, B, C. Very simple. Blue bar, indicator's low, meaning big move is going to start. That's the difference. Indicator high, big move over. Indicator low, blue bar, big move starting. Okay, so we have correction pattern in the impulse direction. Right there tells us that it's going to resume. Okay, so this will keep the bigger outlook, the bigger view right there so you can see it. So you can make rules around that so you're not getting sucked into those counter trend trades on the smaller time frame. Okay, then I'm just pointing out a couple color changes to show you that it catches the bigger moves. It stays green and it stays red the whole way down. Blue bars, big move coming, and extends up. And then we have a buy signal here. Blue bars confirm it. It goes up. Quickly, I'll just show you the 120 on this. Rides up, blue bar high, pullback by the second green here. So anyways, I just want to kind of show on the bigger time frame the blue bars, and this gives you very high odds. The indicator's high, blue bar low, no, not to short. Indicators high, blue bar high, you know not to go long. Okay, so all we're doing in using multiple time frames is gaining odds on the next time frame. That's very key if you're day trading. Or swing trading, you're always going to want to up it 2 time frames to confirm. You want your trigger chart and 2 bigger confirming charts. That will keep you in the right direction. Then it's just learning the patterns, learning the entry zones, and then having a way to get in at an entry zone to confirm a confirmation level. That's the key. You're confirming twice. You're not predicting the first confirmation. That will really get your trading to the next level, and then learn how to hold to the targets. It takes a little bit of time, but once you see it happen over and over, that's where the confidence comes in. Okay, and that's where your trading really gets to the next level. You can scale in, scale out, and really maximize the return for the risk that you're taking on every trade.